video presentation, we will be presenting about Part A, Operating Segment MFRS 8, and Part B, Interim Financial Reporting MFRS 134. Hi everyone, today we're going to diving into the MFRS 8 operating segment. This standard was issued by the MASB in July 2009 and is mandatory for all the companies listed on Bursa Malaysia. The big idea here is transparency. MFRS 8 requires companies to disclose the exact same segment information to the public that is used internally by the CODM. But who is the CODM? They are not necessarily one person, they are the function responsible for allocating resource and evaluating the performance of the company's different segments to make a strategic decision. The core principle here is to look through the eyes of the management. By doing this, we enable users of the financial statement to do two things. First, evaluate the financial effects of different business activity. And second, better understanding of the operating economic environment. That's all from me. I will pass it to the next person.
Assalamualaikum and hi, my name is Nur Farah Widayu binti Abdul Wahid. I will start my presentation with Chief of Decision Making, which is CODM. Based on MFRS 8, what is Chief of Decision Making or CODM? The most important thing to remember is that CODM is a function, not necessarily a single person. It is referred to a specific role within an organization that performs two critical tasks. Firstly, resource allocation, which is determining where the company's capital, manpower, and assets should go. Secondly, performance assessment, which is reviewing the results of various operating segments to see if they are meeting their targets. The CODM could be the CEO, Managing Director, Board of Directors, or Executive Committee. Now, let's look at two specific examples from 2024 annual reports of Spritzer Berhad and Tertiary Milk Industry Berhad. First, let's look at Spritzer Berhad. Who is the CODM? At Spritzer Berhad, the CODM is defined as a collective group consisting of chief operating decision maker and senior management. They review the results of group's operating segment regularly. Their primary focus is on deciding how to allocate resources and assessing performance based on discrete financial information. In contrast, we have Tertiary Milk Industry Berhad. Their structure is much more centralized. Who is the CODM? Unlike Spritzer Broader Management Group, Dashlady clearly identifies its BOD as Chief Operating Decision Maker. The BOD reviews the internal management reports for their segment at least on a quarterly basis. This slide shows the product and services segmentation for Spritzer Berhad. Under MFRS 8, segments are identified based on the company's main activities, which are manufacturing, trading, and others. From the table, we can see that the manufacturing segment contributes the highest revenue, profit, and assets. Means manufacturing clearly meets the 10% threshold and is the main reportable segment. On the other hand, trading and other segments contribute much smaller amounts, so they may not meet the 10% thresholds. Next, this slide shows another type of segmental report, which is the geographical area reporting for Spritzer Berhad. Under MFRS 8, companies are required to disclose geographical information only if it meets the 10% thresholds. However, based on this report, Spritzer Berhad did not provide detail of geographical segment information. Why? Because the group's asset and capital additions outside Malaysia are less than 10% of total assets. In addition, export sales are also less than 10% of total revenue. Therefore, geographical segments are not considered reportable as they do not meet the 10% threshold under MFRS 8.
Now for the last part of Part A, Question 4, I want to talk about the two key benefits of segmental reporting of the company Spritzer Berhad. Let's look at the first slide. The first main benefit is a better evaluation of financial performance and risk. Sometimes looking at just the total company profit doesn't give us the full picture. Segment reporting helps us identify key profit drivers. If you look at the red box here, you can see that the Spritzer's manufacturing segment is the real money maker, bringing over Rm 83.1 million in profit. Moreover, it also creates transparency towards users. At the blue box, the trading segment actually made a loss of Rm 955,000. If we look only at the total group profit of Rm 81.6 million, this loss would be completely hidden from the investor. MFRS 8 prevents this by putting everything on the table. That's all for this slide. Let's move to the next slide. Moving on to the second slide, the next benefit is getting deeper insight into the resource allocation and future cash flows. Basically, this shows us exactly where the management is spending the company's money. First, it helps users predict future growth. If you check the capital addition row at the bottom, management pour over Rm 90.2 million into the manufacturing segment. This tells us they are banking heavily on this division for their future growth. Second, it proves the capital discipline. Notice that they only spend Rm 12,000 on the trading segment because this segment making a loss. Management is being smart. They are cutting back the spending on the losing division and focusing their resources on the winning one. That's all for the benefits. I will pass this to the next person.
Now, I will briefly explain the purpose of MFRS 134. The purpose of this standard is to ensure that companies provide timely and reliable financial information during the year, not just at year end. This helps users better understand the company's financial performance, position, and cash flow throughout the reporting period. In terms of benefit, interim reporting improves decision making for investors and also creditors. Enhanced transparency allows stakeholders to monitor companies' progress more frequently. Now, moving on to what is an interim segment. Basically, it refers to guidelines on how companies prepare and present their interim financial report. MFRS 134 sets the minimum content required, including disclosure, and also explain the recognition and measurement principle that must be applied during interim periods. Next, the interim period. Interim financial reports can be prepared at different intervals, such as semi-annually, quarterly, or even bi-monthly, depending on companies' reporting practices. Lastly, the component of an interim financial report. There are four main components. First, a condensed statement of financial statement. Second, a condensed statement of profit or loss and other comprehensive income. Third, a condensed statement of changes in equity. And finally, selected explanatory notes to provide additional relevant information. In conclusion, MFRS 134 ensures that interim financial reporting is timely, transparent, and useful for stakeholders in making informed decisions. Now, I will be presenting two significant events and transactions that affected the company's financial position and performance in accordance with MFRS 134 on interim financial reporting. Firstly, the company completed and began operation at DLMI at X-State Manufacturing Facility and its new distribution center. This event was mainly caused by the company's strategic decision to invest in a more advanced and efficient production system. As a result, the company's property, plant and equipment increased, which strengthened its financial position. In terms of financial performance, the new facility improved operational efficiency and reduced costs, which contribute to higher operating profits. Secondly, another significant event is the cessation of one-off transition costs and changes in depreciation expenses. This occurred because the transition to the new facility has been completed, so the company no longer needed to recognize those additional costs, and the earlier accelerated depreciation also stopped. The effect of this is a reduction in operating expenses and normalization of depreciation charges. This led to an increase in operating profit and also affect the comparable of financial result between periods. In conclusion, both events are significant because their costs lead to changes in recognition and measurement, which directly impact the company's financial position and financial performance during the interim period.
Assalamualaikum and hi, my name is Mulana Afrina and I will continue presentation to answer for question C in part B, which is interim reporting. For question 3, the question is to identify the interim reporting periods and comparative interim financial statements and present this information in tabular format. For the interim reporting periods, we have 4 parts. First is statement of financial position, followed by statement of profit or loss and other comprehensive income, statement of change in equity, and lastly, statement of cash flow. For statement of financial positions, we present of the end of the current interim period and the comparative of the immediately preceding year. Second, for statement of profit or loss and other comprehensive income, we present the current interim period and cumulatively for the current financial year to date, and the comparative for the comparable interim periods, which is current and year to date. For statement of change in equity and statement of cash flow, both statements will present cumulatively for the current financial year to date with a comparative statement for the comparable year to date of immediately preceding financial year. Since Daniel has presented about Dutch Lady Make Industry Berhad, I will present about Spritzer Berhad. As you can see at the slide, we will do comparative between statement of financial position as at 31 December 2035 and 31 December 2034. For example, for total non-current assets, as at 31 December 2025, the total is 563,462, and for the 2034, decreased by 538,362. For another example is total current assets, the total is 299,224, and for the 2034 is 233,754. Next, for the interim statement of profit or loss for the year ended 31 December 2035, the company decided to choose first quarter to do comparative, which is start from 1 October 2035 until 31 December 2035, and for the preceding year, start with 1 October 2034 until 31 December 2034, and also do a comparative the current period year, which is year ended 31 December 2035 and the year ended 31 December 2034. For example, we choose revenue. So as you can see at the slide, the changes for the quarter is 15% and for the year is 13%. For the interim statement of change in equity for the financial year ended 31 December 2035, since the company chose fourth quarter, so it started 3 months ended 31 December 2035 and the 3 months ended 31 December 2024. So we took the example for share capital, there is no change, and also little ending there is a decrease. So for the last statement for Spritzer Berhad is interim statement of cash flow for the financial year ended 31 December 2035. So there will comparative between 3 months ended 31 December 2035 and 3 months ended 31 December 2034. So for example, we took net cash from operating activities, there is a decrease, and also net cash used in investing activities, also there is a decrease. That's all from us. Thank you.